Morning, everyone. This is Brad Matheny. Today is the 13th of December. It is Friday. We made it through the day and the week, getting very close to Christmas. Only about 10 days away, week and a half away. And then we have another week and we're at the end of the year. Can't believe it. Well, I got some exciting news for you guys today. I'm going to share something that I've been working on for the past basically 3.5 or so weeks. And it's a new type of let's call them cycle pattern or advanced cycle pattern event triggering system that looks kind of interesting. It's more about, market psychology related to the SPY and the QQQ and the Dow Jones. It's not symbol specific. Okay. So it has nothing to do with symbols. Obviously, it's just pretty much general market trending. And it looks to be pretty promising right now. I'm still working on the inference engine. It could take me some time to refine the original cycle patterns here. These were built on similar technology, but refined over about a 1.5 year time frame. And these are pretty darn specific. Okay. These are pretty much every day we get some kind of a mapping of what's likely to happen. Now, granted, sometimes they're right, sometimes they're wrong. I estimate that these are roughly 65 to 75% accurate, and there are those two periods where the market shifts. Remember, these are psychological setups. These are, it's not predicting price. It's not predicting where price is going to be. All it's telling you is what is likely to happen based on this systems analysis as a type of a price bar. So we are in a counter trend carryover mode after the breakaway in carryover trending. We had seen the breakaway yesterday with this big down bar. Now we're in a counter trend carryover mode. You can see that the market is higher today on the SPY, 606.94. We are in a counter trend mode. We could very likely, let me go down here to 2 hours. Given where we're at and where we're going to potentially open, we will very likely see, and I'll just do it like this because this is another beautiful type of a pullback into a range. We are very likely to see the markets pretty much stay in this type of trend today. I think we're going to be looking at another flagging formation setup. You can see we've rolled up and we've tried to flag through this rally, stayed below this level here. Get this down where I want it. So we've got this excess phase peak flagging coming up here, rolling back down, stalling into this window, this gap window, which I think would have to be filled. Excuse me, got a little crud in my throat. So I think what's going to happen today is we're in a counter trend mode, and I think we're going to really kind of just stay in this area. So from where we're at up here, if we stay in this area, I think we're going to stay kind of in this area and roll. Okay, I don't think we're going to see much of anything. You're really looking at a counter trend carryover mode. So how would you look at this trend? Okay, I consider this trend topping. I consider this trend rotating. Here's our daily chart again. And what I want you to remember is, we've come up, we've peaked, we've rolled. I think that we're going to look at a little bit of maybe an upward move here this morning, rolling into downward trending at the end of the day. I don't know too many people want to try to hold positions overnight. We have moderate news. There's always some news on Friday. But again, we're rolling into this sideways excess phase peak pattern. And ideally, folks, the most logical outcome right now is that this excess phase peak pattern will break to the downside here, as I've highlighted here, will break to the downside and attempt to move down into consolidation. Until we get above this level, right here, this 606.07, 609.07. Really, I need you to understand that this pattern is valid. It has not been invalidated. The only way it can be invalidated is to rally back above this level right over here. That is the only way that we can invalidate this excess phase peak pattern, is to try to get above this 609, call it 10, 609.15. So we are in a flagging formation. We had slightly rolled yesterday. We are higher again, back into the flagging formation. Let me redraw the flagging so you can see clearly where we're at. So here's our rally coming up. Here's our peak coming back down into flagging. And as long as we stay in this flagging mode, we are trending higher. So generally in this flagging mode, we are trending higher, but cautious of a breakdown. In other words, we should be expecting a breakdown to happen until this invalidates, but we should be cautiously moving higher, meaning that you could probably be long, 20, 30, 40% of your typical allocation here until we invalidate the breakdown move, getting below this level right here, getting below this level is going to be our big move down into consolidation. Okay. So we're really looking at, the potential for a bit of a breakdown. Now, let's go take a look at QQQ. Same type of setup, except, let me get rid of some of these. Except we have a new recent high yesterday on the daily. So we have invalidated, I'm going back to 2 hours right now. We have invalidated this pullback. You can see here, that's part of the process of the excess phase peak pattern. Breaks out, confirms upward trending. Comes down, breaks out, confirms upward trending. So you can see here, this is a pullback, and then we get the rally phase. It broke through very easily to see we got above this high, confirmed upward trending. In order for us to get any higher, we'd have to see this move here, break above this level to confirm upward trending. We're still in an upward trend. Understand that. Let me move this. We're still in an upward trend. This move here confirmed our upward trend right here. Okay, very solidly confirmed our upward trend. This move as well confirmed our upward trend right here. This pullback down into this deeper low created a bit of a washing rotation across this low here, which got below the level and then rejected very hard to the upside. So you got to watch these cycle lows and cycle highs. Again, that's the basis of Fibonacci price theory. Basically states that price must always attempt to reach new highs or new lows always. Failure to reach a new high means price will revert to attempt to reach a new low. Failure to reach a new low means price will revert to attempt to reach a new high. So again, guys, it's not rocket science. If you understand that trading is about what price is going to do. So you have to try to take advantage of the opportunity to see what's going on. So you can see here that price attempted to come down and make a new low and failed. Okay, it didn't make a new low yesterday. It didn't come down here and close this gap. It didn't close down here. Now we're looking at a 531.45 open, higher potentially. Okay, well, we'll see what happens. If it opens up in this area, then we're going to be looking at another new high right in here, breaking above this high right here. And that's a good thing. That means that we have a new high. We're continuing to trend higher. We can put, greater allocation into long trades and try not to short the market. Obviously, if you do short the market, the QQQ, smaller allocation, 20, 30, 40%. You want to trade in the direction of the trend. Now, yes, there are periods where you're going to get this rollover topping pattern. And there are times when you can go into maybe an options trade or a short trade, put option or a short trade to try to catch some of these pullbacks. These pullbacks are what happen. This is price movement. This is how it works. As I mentioned, Fibonacci price theory, always attempting to reach new highs and new lows through this type of rotation. So at this point, we've got a new higher high. We're looking at carryover in a counter trend mode. We're in a bullish trend, obviously. And again, a carryover in a counter trend mode to me means we're likely going to see it roll downward today. So I need you to understand that the counter trend mode suggests that we're likely going to move downward instead of up. We're got a higher open potentially, but we may roll into a reversion and kind of move downward today. So be aware of that. The fact that we're kind of looking at a peaking, rolling, stalling, maybe consolidating back down here into these lows. The reason I believe this is likely to happen today is simply because we're moving into kind of a rolling topping pattern in the SPY. If we're not going to see the SPY take off across these highs, which it doesn't look like it's going to do right away, then I think we're going to be trapped in this consolidated range. Now, we're watching the other markets as well. So gold and silver, yesterday had a pretty big pullback. And let me come in here and show you this. So there's our carryover in counter trend mode. Okay, counter trend indicating that we're likely to move against the primary trend, which again, NASDAQ is showing us bullish. S&P is showing us bullish in a pause. I believe that we're going to be counter trending slightly to the downside today. The gold cycle patterns are indicating a nothing pattern after yesterday's bottom in counter trend mode, which is slightly, or I would interpret as a top. A bottom in counter trend mode sets up a top. So when we come back over here and we take a look at that kind of a roll, okay, there's the 12th, and here's our top. Move this up here, get rid of this little dot that I created. And here's our top. Make this bright purple, I guess, or some other color. You can see it. Bright cyan. There's our top. Okay. And there's the top right there in silver. So there's our top. And we've got a bit of a ways to go to try to recover back into this mode. I mean, we've seen this big pullback again. It rejected at 27.60. It got above 27.20. Gold did. Now we're looking for support. Now we're going to start coming over here and start taking a look at previous highs and lows. Remember, we have this apex range right here, which is going to play an important role in the near future, potentially as a support level. We have this apex level here, which is going to play an important role out in the near future. And we have these previous support and resistance levels down in this area and in this area acting as support for price. Now, we have pulled back here. If you take a look at this, okay, from these lows up to these highs, we have pulled back about 50%. So I'm going up to rejection points. and we have pulled back actually to 618. We're at the lower 618 level from an actual pullback. Okay, and see, now let's take a look at this one from roughly these rejection points up to this rejection point, and we are down at the 618 level here. So we have a 0.618, and we have a 0.618. This is a very deep pullback for gold and silver. Given where we're at, and given the fact that we want to try to see some support here, the dollar moved back above 107 again. And what I want you to be aware of is that we could continue to see some pressure here, but ultimately this sets up a very good buying opportunity for the next move higher. Again, I do believe that metals are continuing to struggle, but want to move higher up into the $35 to $37 for silver, and up into the 28 to 2900 plus for gold. This sets up a very good pullback. Now we have no pattern right now in this mode. We are in trending mode. We were in counter trend mode with a top yesterday. We got it. We're still bullish. We could see a little bit of upward movement today, meaning that we could see gold potentially move up, maybe back into this 2720 area, and we could maybe see silver try to target this 32 area today. I believe that is likely. Okay. Now let's move off to Bitcoin, and then I'm going to show you the new things that I've got working. Bitcoin on a 2-hour chart completely rejected the highs again back up here. We got down below this level. Remember, I was talking to you about getting below this level. Turns bearish yesterday. We are below that level. We have rejected down below this level and consolidated. You can see the excess phase peak pattern here. It's very interesting that we moved into a kind of a consolidation phase. So now let me get rid of this. And I need you to understand the two excess phase peaks here. We've got the purple one setting up right up here off this recent high back here, rolling down, consolidating. Yeah, it did get above the high here, but it rejected, came back down, closed below this low level on the flagging. Technically, we have confirmed a downtrend right here, but we have moved into consolidation. Brad, what is consolidation? Why is it doing this? Folks, consolidation is a period where part of the excess phase peak pattern, where we get into a second stage. So the excess phase peak pattern is typically a peak, number one. Then we end up getting a pullback and flagging, number two. Then we end up getting a breakdown into consolidation, number three. Then we end up getting a breakdown from consolidation, number four. And ultimately, that leads to an ultimate low in this case, or high if it was inverted. So we have this little short-term pattern setting up here. Okay, this really does consolidate into a range roughly from here. Try to make this very dark. You can see that that is our upper range. And then we have this range here, which is our lower flag range. Carry these out. So these are the areas now with this little purple excess phase peak pattern that we are very concerned with. Okay, this is basically going to again be get above this level, we go long, get below this level, we go short. Okay, we're already technically in a short mode because we've gotten a new lower low. That's how the Fibonacci price theory works. Price attempts to set a new higher high, failed. It must come down to set a new lower low. It did. Now it's coming down to set a new lower low, failed. It must then try to come back up and set up a new higher high, which it has yet to do. I mean, it does right here. There's our higher high. There's our lower low. So now we look like we're getting rejection again, back to the downside. And I would suggest that Fibonacci price theory, after rejecting, and remember, new lower lows are typically predicated in a trend with a lower low and then potentially a lower low way down here. So remember, in a trend, higher high, higher high, higher high, higher high, higher high, all the way up. In a downtrend, lower low, lower low, lower low, all the way down. And that'll happen through rotation, okay? So depending on how you look at it, you know, if I go down to a 10-second chart, I'm going to be watching these intermediate, very tiny little rolls in price. But here on a 2-hour or 4-hour chart, I'm catching the bigger swings, trying to tell you what is likely to happen. So given where we're at and given the recent breakdown, it looks to me like we're going to be moving into this breakdown 4 phase, trying to come down and find a low, which could be down in this area, which again goes all the way back over here to this support area. Okay, now with the bigger blue pattern, look at this. Here's the bigger blue pattern rolling over, and I'll redraw these if I have to. Let me come in here. Yep, I'll redraw it, no problem. Here's our peak. We came down. We're flagging on up. Blue. And flagging on up. So now we failed to get above this high. Carry this high out. Very, very critical. I'll make this blue, dark blue. And we have our flag low down here, which we have in green. I'll make this dark blue. Carry it out. And look at this, folks. It gets really even more fun when you get to this. So now we failed to get above this high. We got above it right over here, just like we got above the purple high and then rejected. Okay, that's clear rejection. Okay, it set up a high, it rejected, it came back down, set up a new low. What did it also do? It broke the excess phase peak flagging pattern. Okay, we need some more confirmation. We need this little breakdown right here. In order to confirm this downtrend, I would be looking for a breakdown of this level. I'm going to make that blue, which I think I did. Yep, I did. I would be looking for a breakdown of that low right here. Is that a pen? That is a pen. We'll draw this in purple. I am looking for a breakdown of this level right here to confirm that this blue excess phase peak breakdown is actually taking place. So again, I'm looking for number one, a breakdown of this level to continue the purple trigger downward. So let me do this. Copy this. I'm looking for not only a purple, but a blue right here. Okay. A breakdown of this level, number 3, right here, 99,300 roughly, is going to confirm the number 4 phase of the purple excess phase peak pattern, and it's going to potentially confirm the breakdown of the blue flag. And that means that we would then be looking at a very solid downward trend into consolidation. Well, let me try this differently. This one obviously didn't happen, but that's our bigger broad pattern. I'll play with that one later, because remember, we still have a very big broad low pattern here. This is this pattern right here. We are still playing out a very big, broad excess phase peak pattern rolling across these lows. Okay, I mean, here's the low, here's the flagging coming across here. Make this light cyan and set it up as a dashed line or a dotted line. And then here's our upper flagging up here. We are still rolling into this mode here as a big, broad excess phase peak pattern. So again, that's where this comes in. So we've got a bunch of excess phase peak patterns playing out. But if we get this breakdown here, what's going to end up happening is this blue and this purple is going to turn into, the purple will turn into a move down to the ultimate low here, which will likely stall around this area. But the blue pattern must attempt to break down into consolidation somewhere down here. So ultimately, this big blue event is going to likely prompt a breakdown like this in Bitcoin. Now, what would invalidate this, folks? What would invalidate it is this right up here. We get above 103, we basically get above 102 on a strong close with a rally trying to break above. Finally, this is the ultimate level, 103.63 or 600, 103.600. Then we're back into the races. But until then, if you're following what I'm doing here, we have rejected. We now have this little purple pattern, which is the most prominent, most recent excess phase peak pattern. And secondarily, we have this blue pattern, which is the more broad excess phase peak pattern, playing into the cyan, the light sky blue color, turquoise color, bigger, broader pattern. And then we also have this rejection here. So here's our pullback. We've rejected at this low, the yellow. At this point, if we were to get this move down below this level here, this yellow pattern would confirm here by doing this as rejection. It would confirm to the downside. This is a down pattern. So we either break above this high, which we have yet to do for the yellow, to set up our move up to, this would be a move up to consolidation here before attempting to break higher, or we completely invalidate that pattern by moving downward. There's my systems running. We move downward and we end up taking out a new low, which is the highest probability outcome right now. Okay, I don't want to run out of time, so let me come over here and show you this, what I've been working on. So these are the daily, what I'm calling them is GAN or advanced cycle events, okay? I want to try to provide better context for you. So now these do not happen every day. You can see here they're kind of out of order, and that's how my lookup routine does it. It just maps out the event cycles, tries to figure out what they are, and then tells us where we're headed. So right now we just got done with the 12th. You can see here on the 12th, we had a nothing pattern other than strength. That was yesterday. That strength would carry into the next pattern, which would be here on the 15th. 15th carries over as a breakaway. Okay, we then have the 21st indicating a major bottom. So right before Christmas, we're getting into a major bottom with in-trend weakness. So our strength is going to indicate a breakaway on the 15th, which again is going to be Sunday. Okay, so you need to understand these are event cycles. That means next week we're going to be looking at a disruption type event and a breakaway type event, moving into weakness on the 21st. That is a Saturday with a bottom. Moving into a disruption on the 23rd. That is right before Christmas. If I remember right, that is a Monday. And then we move into the 31st. We have a cycle event that pretty much is nothing. Moving into, again, a 31st year, separate cycle event, which comes in with a peak, a breakaway, and into strength on December 31st. So we could be looking at, a very big roll. Let me come over here and I'll show you the chart I've been using to map some of these things. So this is my, it's kind of cool when you look at this. So there's my daily SPY chart, and we come over here and take a look at daily. So 12.8, it called a top. 12.8 is pretty much right there that weekend. So here's our topping pattern right there. There's our little topping pattern. And 12.9, it called a major bottom. Okay, 12.9 occurs. There's 9, there's 10. So remember, as I'm learning with these, I'm basically trying to figure out that they have basically a 1 or 2 day plus or minus window to try to find these tops or bottoms. On 12.12, we're moving into strength. Okay, 12.12 was right here yesterday, moving into a little bit of strength. So here we have our little bit of strength to the upside. Spread these out so you can see it. And then 12.15, we're moving into a breakaway. So 12.15 we don't have, but that means that Monday over here, we could be looking at a breakaway. And I think what we're going to be looking at as a breakaway is possibly the downside. So, and that's based on what I believe is likely to happen, because we're moving after that breakaway right here. We're moving into the next major pattern is 12.21 into a major bottom. So 12.21, puts us right here into a major bottom, roughly right around that weekend. And I think we're going to be looking at some sort of a major bottom over here. So now, these new daily patterns, which you can kind of watch these if you want. Remember, we're looking at a major top apparently happening somewhere around January 18th. And we're looking at disruption around December 18th, 20th. Guess what that aligns with? Yep, the inauguration. So be aware that these, and again, these have nothing to do with mapping out events like the inauguration or anything else. These are mapping out cycle events that are essentially fixed. They originate at a specific date and time, which I hunted for. Took a lot of effort to find the best starting point, but it's a key starting point. And, remember, these types of predictions have nothing to do with, knowing news or knowing event cycles like the inauguration or anything else. These are, like this topping pattern at December 8th. Well, how did it know it was going to top, or what was it going to do? Well, we knew it was going to top simply because of the way it's set up. Okay. And that gives us that topping pattern right there on the 8th, rolled down. So now we're looking at these major bottoms around the 9th and around the 21st. And I think we're going to be rolling higher and then weakening into the major bottom here, which rolls higher into this January 6th top. And that's going to be right over here. The January 6th top will put us right here as some sort of a topping pattern. So could be here, could be up here, don't know. We'll see when it gets there. Could be over here somewhere. But the idea here is to give you guys more context. Now, on top of this, I've also created weekly patterns. So now weekly patterns get even more interesting. So you look over here, we have a breakaway on 10/17. And then we have a nothing blank pattern here on 1026. Okay, 10 or 1226. Then we have a major top on 11 or January 28th, 2025. So get rid of that. There's our major top pattern right here. And what happens after, just after January or just before January 28th? It is a potential rally top setting up after Trump is inaugurated, basically 5-6 days after Trump is inaugurated. We're going to move into a rally top. Then we move into a secondary peak on February 14th, Valentine's Day. And then we move into a breakaway. Move into a bottom here into strength on February 10th, then a peak and a breakaway, and then moving into weakness. So now, like I said, as I continue to build these out, these are going to be able to tell us more about what's coming. But if I were to read these and come over here and try to figure out what's happening, we're looking at kind of a rolling pattern, rolling maybe into another top, rolling down a little bit after Christmas, rolling up into a peak here, and then a secondary peak here, and then rolling downward. So that is my guess as to what is potentially going to be happening right now. But I've got these indications, like I said, from these cycle events of where peaks and strength are going to happen. Notice that strength happens all the way up until July. And then all of a sudden we get no strength whatsoever. We're going to be rolling, like I told you. So here's where our strength ended, right over here in July. And all of this moved into basically consolidation. So let's go after July, August, and all of this moved into essentially a post strength exhaustion move. And that's the way I interpret it. So we'll see how this plays out. Ideally, for 2025, these will become more refined. I will try to provide greater context, and hopefully these can give you guys a better feel for what's coming. Now, remember, the daily patterns are pretty cool. And the next phase, guys, is to go down into hourly. So I'm finally getting these worked out into hourly, maybe even down into 10-minute intervals. We'll see. We'll see how it plays out. Okay, guys, that's it for now. Let me come back over here and I'll talk to you later.